Anyways, fine. Right. So advanced audit and assurance pre-mock section A consists 50 marks question and section B consists 25 marks 2 questions. So today we're going to discuss section A and section B pre-mock. So I hope you can understand the principles clearly and whatever that we discussed in the class, right? I hope you might able to catch up all those things, right? Fine. Now, the basic thing that we need to understand here, when you are doing a question, is very simple, that every student should aware that exam paper is a practical questions, consists practical questions. So even in the triple A advanced audit and assurance, the questions are not theoretical. Most of the questions are applications, right? So my kind advice to all of you, those who are doing exams, you should develop two skills. One is skepticism mindset. Two is professional judgment. Skepticism mindset means, in the sense, I can say, like, how you can question that particular scenario, that is matter. But if you are looking at professional judgment, it is very important to identify the facts given in the scenario. It is very important to identify the facts given in the scenario, because if you look at the case study students, most of the case study facts can be visible, can be invisible. Can be visible, can be invisible. When students are doing this type of case study questions, they very conveniently they are taking visible facts. Conveniently they are taking visible facts. But when it comes to invisible facts means those facts are not directly available. Those facts are not directly available. So those facts, we need to apply our professional judgment and we need to identify those facts, right? So why professional judgment is important? To get these facts clearly. Because the main challenge that you all are facing is how effectively we reduce the expectation gap. Examiner is having some expectation. Students, we are writing answers to our level. There is a gap. This gap should be reduced to acceptable level. This gap should be reduced to acceptable level. That is what called eliminating or reducing expectation gap. Eliminating or reducing expectation gap. So section A, it consists of 50 marks question. Let's move to that. So try to understand. Again, I'm telling, professional skepticism and professional judgment is one of the basic concepts that we need to understand and we should develop in order to get things done. Right, let's move to the case. It is July 2005. You are the manager in audit department of S Associates, a firm of chartered certified accountants, and you are responsible for the audit of T Textiles. It's a listed company, new client to your firm. So it's a listed company, it's important, and it's a new client to your firm. The company is a manufacturer of globally famous range of textiles with sales around the world. The company has a financial year end 30th September 2005, and you are about to start planning this year's audit. The following exhibits available, the left hand side, yes, exhibits include, exhibit number 1 is partner's email. So when you are writing answer, yes, you are getting professional marks. So don't forget the format, partner's email. Background information about the company. Selected financial information, exhibit number 3. Notes of a meeting. So these are the requirements. These are the requirements or exhibits provided. With this, let's move to partner's email. Partner's email, it says, to audit manager from WR, audit engagement partner. The subject is T's Textiles audit planning. Date is 1st of July 2005. Hello. I attended a planning meeting last week with the finance director and representative of the audit committee that T Textiles company, at which we discussed business developments during the year and plans for the future. Good. The audit committee is keen for us to make as much as possible of their internal audit team. I have provided you with my notes from this meeting as well as some background information about the company from our client due diligence procedures. As this is the first time we are performing this audit, I have decided to use profit before tax as the basis for determining materiality in line with S Associates internal quality procedures. So you might study the procedures, quality procedures, ISA 220, individual quality control, and ISQC, firm level quality control. Both together, it comes under the firm's internal quality procedures. I require you to prepare briefing notes for my own use in which you should evaluate or prioritize significant audit risk. So they ask, the question verb is audit risk. If they are asking question verb like audit risk, that includes inherent risk, control risk, and detection risk. Inherent risk and control risk, that is come from the client side, that is we call risk of material misstatement, and the detection risk. So we need to identify and we need to evaluate significant audit risk. How to write audit risk or how to write risk of material misstatement? So when we are writing this audit risk or risk of material misstatement, the first thing we should identify the issue. The second thing, we should assess materiality. Third thing, we should identify the standard treatment. Fourth one, we should write the impact to financial statement. The impact to financial statement. So we should explain what is the possible impact to financial statement. What is the possible impact to financial statements? So the second question is principal audit procedures performed related to the non-current asset relating to planned closure of particular factory, H factory. That is, again, I told you when it comes to advanced audit and assurance, most of the standard procedures questions are, audit procedures questions are standard based questions. So the problems are related to what? Standards, accounting and reporting standards. Most of the problems are accounting and reporting standards. If I look at here, the non-current asset relating to planned closure of H factory, that is comes under IFRS 5. I could say IFRS 5 non-current asset held for sale. That is a standard. Second one, share-based payment scheme. Share-based payment scheme comes under IFRS 2. IFRS 2. So these are the two areas where we need to apply our procedures. These are the two areas where we need to apply our procedures. So audit procedures over IFRS 5 non-current asset held for sale, share-based payment, IFRS 2. These are the two standard-based issues that we need to discuss. Right. Then using the details relation to the internal audit teamwork, internal controls contained in the meeting notes, that is exhibit number 4, I require you to discuss the factors considered determining nature and extents reliance to be provided the work of internal audit team. So we might study under audit evidence relying the work of others. So under relying the work of others, we might discuss like relying the work of expert. There are two types of expert: management expert and auditors expert. And relying the work of internal auditor and relying the work of service organization. So here, before we rely on internal audit work, what sort of matters that we need to concentrate and consider? right? That is our first exhibit. Notes of the meetings, that details are given, partners email. Now let's move to background information. The second exhibit is background details. Background detail is very much important because this will give you KOB. This will give you KOB. What is KOB? Knowledge of the business. When we do a question, triple A question, the key area is how effectively we understand that problem. How effectively we understand that problem. Understanding that problem primarily depends on to what extent that we know about the company. To what extent that we know about the company. That is important. Therefore, what I am trying to tell you is, when we are reading this particular scenario, background information, try to develop a clear understanding about a particular company. Right? Now let's see here. The textiles company was formed 120 years ago and was originally based in a small textiles mill. A textile mill is a manufacturing facility where textiles or types of clothes are produced or processed into finished goods such as clothing. The company's clothing products are marketed under the popular Norfolk Cloth brand name. What is the brand name? Norfolk Cloth brand name. The company became listed 20 years ago and complies fully with the best practice corporate governance regulations. The internal audit department provides assurance to management on the effectiveness of the design and operation of internal controls and reports of audit committee. Right? The company has recently experienced a growth in revenue, but the labor intensive production methods and lack of economies of scales have resulted in low profit margins. In order to address this, the company has decided to take the following measures: relocation of production and closure of Holt factory. In order to reduce the cost of production, allow the company easier to access the cheaper end of the clothing market. The company has decided to close the second largest of three mills, known as Holt factory, and relocate production to a foreign country where labor costs are cheaper. The company can relocate a very small number of staff from the Holt factory to the central factory, which will become the company's main production facility. However, 150 staff from the local workforce will be made redundant. At a total cost of 1.2 million, the company expected to complete closure Holt's factory. See here, the first thing what they are discussing here is they are moving to cheaper alternative. They are moving to a cheaper alternative. See, if you look at here, cheaper end and the clothing market, close the second largest three mills and relocate the production in a foreign country where labor cost is cheaper. When they move to a foreign market, there is a forex risk that you have to explain here. Okay. And when you are relocating, there is a provision to be recognized. That is, we call restructuring and relocation related provision. And here, if you looked at 150 staff from the local workforce, 150 staff from the local workforce will be made redundant. Total cost of 1.2 million. That is, redundancy provision is required. That is one. Risk of material misstatement, IAS 37 provision, contingent asset and contingent liability, right? So present obligation arise from the past event, future economic benefit outflow is probable, cost is measurable, then you need to recognize a provision. But if this redundancy, if you looked at, this redundancy, suppose if the announcement is made before the year end, then provision to be recognized. Suppose if this announcement is made after the year end, then it's the contingent liability disclosure is required. Okay, now let's move to the second paragraph. It is unlikely that the machinery used in the mill will be transferred. It is unlikely the machinery used will be transferred. And it is expected that will be sold along with the property. The carrying amount of H factory, including the machinery, is 4.7 million. An external surveyor is currently carrying out the valuation of Holt factory. Right? The management of a T Textiles company has been in discussion with another company who may prepare to buy the whole factory as an ongoing business. As ongoing business. If this were go ahead, if it is successful, management believes they would be able to sell Holt factory for 4 million and the buyer would retain half of the existing workforce. However, T Textiles company would still need to make the remainder of the staff redundant prior to any sale. Prior to any sale. Okay. Then opening a new branch in Farland. Farland is in another country. The company has set up a new operation in Farland, a country developing a reputation for quality textiles with significantly lower labor cost than in the country of Tonham Textiles company currently operates. Farland's unit of currency is POBL. Actually, if you look at here, you can take it IAS 21 forex risk, closing assets and income expenses need to be translated. So there is a risk. If it is not happened properly, the financial statements get misstated. Financial statements get misstated. That we need to understand. To date, the company has purchased a combined factory and warehouse at a cost of 14 million. POBLs, when the exchange rate was 2.22, POBLs equal to $1. The average exchange rate 2005 has been 2.35 POBLs for every $1. Once the senior managers with Tonham Textiles company has relocated to Farland, and it is working with the local team to recruit and train staff for the new mill. Management expects that the Farland mill will start production next few weeks and the projected revenue for the financial year ending 30th September 2005 include forecast sales from Farland mill August 2005 onwards. This has been established as a branch Tonham Textiles, not a separate subsidiary. It is not a separate subsidiary. So if you look at the first question, they ask us to identify audit risk, so 22 marks. So I should suggest a minimum 9 or 8. Audit risk should be written down here. Then they're asking the audit procedures. Then they're asking the factors. Okay. Here, they gave financial figures. Students, when you are doing audit risk questions or risk of material misstatement questions, if financial statements or extract of financial statements are given, financial statements or extract of financial statements, given, then what we should do is we should perform ARP. What is mean by ARP? ISA 520 analytical review procedures. So we need to perform a very basic analytical review procedures when we are doing risk assessment. So let's do an analytical review procedures. See here, revenue 57,400 and it's become 79,500. Revenue is increased, a massive increase. If you look at profit before tax, that is 6,500 and it's become 8,800. So there is again there is an issue, increased. So if you look at here, $57,400 actual revenue, forecasted revenue 79,500. So first calculate the sales growth, calculate the profit growth also. Then note it said this information has been prepared as 1st of July 2005. The year-end share price is currently unknown. It is not deemed appropriate to project the share price as at 30th September 2005. Share-based payment scheme. In order to motivate employees, directors, company introduces share-based payment scheme to all of their existing staff. The share scheme provides the option for the staff to buy 1,000 shares each at a price of 2.5, providing they remain with the company until the vesting date 30th September 2007. So the options were granted on 1st of October 2004 and have a fair value of 1.7 at that date. The company does not expect to lose any staff over the vesting period except the staff expected to be made redundant as a result of closure of particular factory. Tonham Textiles employs around 1,000 people as of 1st of July 2000. Right? So share-based payment scheme, right, need to concentrate on that. There's a litigation issue as well. Litigation issues are again a proper provision to be made when there is a litigation. If the provision is not sufficient, it's a completeness problem. Right? It's a completeness problem that we need to understand. So litigation, if you take, it says the company is involved in a legal proceedings. Company involved in the legal proceedings. Against 3 retailers who use the term Norfolk cloth. Okay. To describe their clothing range. Patents protect the Norfolk cloth name and only products made at the Tonham Textiles Company mills are permitted to use Norfolk cloth name. Tonham Textiles Company is suing the 3 companies the damages of 2 million. This is not currently recognized in the financial statements. Right? Contingent asset. Flood damage. See here, Tonham Textiles Company suffered devastating damage in June 2005 when a local river caused flooding following recent heavy rainstorms. The company's main warehouse containing inventories of cloth for the winter clothing ranges planned for a sale from August 2005 was flooded, and cleanup operations have yet to begin. Management has estimated the value of inventory affected is 625,000. No allowance for the inventory or further cost in relation to the damaged warehouse have been recognized in the forecasted figures. So when there is a damage in the inventory, there is a possibility that net realizable value, the recoverable amount of that inventory is lesser than cost. By that, there is a possibility inventory may be overstated in the financial statement. There is a possibility that inventory may be what? Overstated in the financial statement, that we need to understand. Okay, so that is important. That is important. So when we are looking at all these things, these are the matters that we need to incorporate when we are writing what? Risk of material misstatement, or else I could say audit risk. The second question is the non-current asset relating to planned closure of whole factory. When we are writing procedures, students, don't forget IFRS 5 non-current asset held for sale. What standard set? Active market should be there. We should advertise sufficiently. That should be separately identified in the financial statements, those who, whatever the assets that we're going to sell. And also there is a reasonable confirmation within like 1 year period. Active steps are taken by management to sold that particular asset. And also you can't calculate depreciation on that, right? So all these things you should take into consideration when we are identifying the non-current assets relating to planned closure of whole factory. And the share-based payment scheme, if I take share-based payment scheme, again IFRS 2 to be applied when you are writing audit procedure. So in audit paper, advanced audit paper, when you are getting a procedure question, don't forget to apply the standard to that particular procedures question. Don't forget to apply standard to that particular procedure question. And if you look at answer C, question C, discuss the factors to be considered when determining the nature and extent of reliance which can be placed on the work of internal audit department. You all might study this, that we can say when we are taking relying on the work of auditors, internal auditor. Internal auditor's scope is broader than external auditor's scope. Internal auditor's scope is more broader than external auditor's scope. But there are few similarities that you can find between internal audit and external audit. For example, internal auditors also do fraud investigation. Internal auditors also do compliance audit. Internal auditors also do management audit, and internal auditors also do financial audit. Therefore, internal auditors' work is more broader than external audit, because external audit is more deeper in a specific area called subject matter financial statements. But internal audit is not like that. Internal audit, if you look at, it is more broad. The scope is more wider scope, more broader scope. And best value service, value for money service, management audit, IT audit, system audit, financial audit, organizational audit, forensic audit, compliance audit, all these work are done by whom? Internal audit. Therefore, before we rely on internal auditors' work, it's our duty to understand what is their scope. What is their scope? You got my point? Because the scope under external audit is decided by who? It is decided by auditor, especially ISA, auditing standards. But when we are talking about internal audit, the scope is decided by management. So there is a primary scope difference. The way that external auditor seeing things, The way that internal auditors seeing things are totally different. Are totally different. That we all need to understand. And also, before relying the work of internal audit, the scope is matter we should consider. Not only that, whether internal auditors are independent, because internal auditors, if you take, there is no such requirement for them to become as an internal auditor. What are the requirements? No specific requirements like external. If you look at external auditor, there are few requirements. For example, that person should be a member of professional body. That person should be a member of professional body. But here, nothing like that. There is no such requirements. There is no such need. Therefore, when we are talking about this particular relying on the work of internal audit, we should understand their competency and we should understand their independence. If I take competency, yes, their qualifications, previously the work that they did, right, to what extent their recommendations are implemented, all these matters to be concentrated. But on the other side, when we are talking about independence, who decides the scope? Who is influencing internal auditor? To what extent their reporting channels work, like whether they are reporting to executive directors or whether they are reporting to audit committee. See, under corporate governance, if internal auditors are reporting to audit committee, simply I can say they are more independent. But if they are communicating things or if they are reporting to executive directors, their level of independence is very low. So we need to concentrate on that as well. That is also important. Right. Next question. Fourth one. So that is about 50 marks, section A question. Now let's move to section B questions.